These streets aren't far away. They're not across the tracks or on the other side of the river. They're part of our community. At Comerica Bank, we believe we all live here. That's why we've invested over $20 million for affordable housing, financial education, and workforce development in lower-income communities, as well as over 60,000 hours in volunteer time, because we believe every street is a new road to opportunity.
And welcome. Thank you for joining us today for our 10th annual Homeownership Conference. It's a pleasure to have you all here joining us today for our topic on the power of credit. I would like to give a huge thank you to our platinum sponsor and sponsor for today's workshop, Comerica Bank, who's also, again, presenting here with me today. My name is Gabriela Munoz. I'm one of the homeownership specialists here at VCCDC. So on a daily basis, I'm meeting with families, going through their financial goals, whether it be to improve credit for a goal of purchasing a home, for refinancing, going through maybe a difficulty in affording their mortgage, or even those that are trying to access a reverse mortgage. I do hold various certifications from HUD as well as NeighborWorks Center for Homeownership Education and Counseling in the areas of homebuyer education, pre-purchase, post-purchase education, reverse mortgage, foreclosure prevention. So here with me today as well is Adelita Silva with Comerica Bank. Adelita, would you like to mention a few words here about yourself?
Hi, good morning, everyone. Yes, thank you, Gabby. My name is Adelita Silva. I have been in the banking industry over 40 years. Currently, my position at Comerica Bank is the banking center manager at the East Long Beach location. Again, my passion is, as I've been in this industry for so many years, is to help people understand credit, understand the impact, and how vital it is that we all understand how it does impact our lives day to day. So credit, shall we talk credit? What is credit? What is credit? People say, I don't, please explain. Our credit scores are an accumulation of information over time. So these scores impact almost every single thing we do in our life, whether we get a cell phone, we buy a car, we're going to rent an apartment or a house, get a mortgage, or even when we go looking for a job. All these activities in our lives will bring about a background check, and the background check includes a credit inquiry on what these companies have accumulated as far as the score. So, given that this is part of our lives and and impacts us so much, we might want to say, why is it important? Why is credit important for home buying? Why is that? Why is it that it's something that we should look at before we actually are thinking about buying a home or before we actually apply for the loan? Why is it important? Because our credit score will tell lenders or others how we take care of our credit, how important it is to us. When we build strong credit, it also helps us get better terms and rates. And if you get a better rate, which means a lower rate, that impacts the payment that you're going to be paying every month. So that's part of it. The other thing is those rates and terms, since they last, when you buy a home, usually you're looking at a 15 plus to 30-year mortgage. So that is a long time. So we really want to take put some strategies in place to make sure that when we apply for the loan, our credit score is high. We have a high credit score. Some different types of loans that are out there. We have conventional loans, usually a minimum credit score is 620. We have VHA loans, minimum credit score is 580, and along with VA loans, where although there's no particular structure of the VA loan, usually it's about 580 score. So you might ask, who scores us? Who is compiling this information about me? We have three major companies that lenders work with: TransUnion, Equifax, and Experian. And each of these companies have a website and a phone number that you can call. So they compile our information. And then what happens with that? What happens? So credit scores run from about 300 low to 850 high. The credit score itself is compiled by different factors. The main factor is 35%, and that's payment history. Are we making our payments on time? Are we making the amount we're supposed to be making on time? And realize more than 30 days after making that payment, more than 30 days after it was due, can be considered late. The other higher factor is 30%. How much do you owe? How much do we owe in debt? How much do we owe on our credit cards? How much overall debt do we owe? Then we have 15%, which is credit history, the length of credit history. So long credit history is good. So if you had a credit card, you have a credit card that you've had for 15 years, that's okay, because the longer length of all our compiled credit is good. 10% is the credit mix. How much do we have in credit cards? How much do we have in car payments? Maybe a mortgage. So they look at that and they say, what's the mix of the type of credits that we have? And then 10% is new credit. So every time we apply for something or somebody, what we call, will run our credit, that's a 10% factor. And mostly every single time somebody runs your credit, what is a big factor is understanding your credit score can go down a few points. It can go down a few points. So running credit, having, going out and maybe applying for a bunch of credit cards may not be the best strategy if we're looking to increase our credit score, because our goal is to just to apply for a mortgage and get our home, purchase our homes. Okay, so let's talk about amounts owed. Now, that's 30% of our overall credit score. So most of us in our day-to-day lives, we use our credit cards to purchase gas, groceries. Some people pay all their utilities on their credit cards. They pay their mortgage. And one of the factors why people do this is because we love those points. So every time we use our card, we get some points on the credit for the credit card, which in turn can turn into gifts or cash on the payments, things like that. So we love to use our credit cards. However, remember, 30% of our overall credit score is based on what we owe. So normally we want to stay between 30 and 40% of the credit card limit. So one strategy is to think about maybe 3 to 6 months down the line. If you're going to make a major purchase, sometimes it's better to spread that over different credit cards versus putting on one whole credit card. Because when you max out your credit card, you do impact your credit score. And it could take up to 6 months to recover from that score. So if we're looking at applying for a mortgage in 3 to 6 months, we really want to have a strategy in place so that our overall score will not be impacted by other types of purchases and put on the credit card. Let's see what else. Anyway, so that's pretty much my portion. I hope it helps. Gabby, I think you're going to lead us into how we can take more hold on our credit, right?
Yes, so keeping that momentum going, the next easy item to take control of in your credit is avoiding applying for new credit. So while that 10% doesn't sound like very much of an impact, it can make the difference between one type of loan option versus another. So avoiding applying for new credit, unless you absolutely need to, we want to definitely make sure to keep that on the very minimum. There are, however, two different types of credit inquiries or credit applications that you can do. And so that would be a hard inquiry versus a soft inquiry. So looking at the soft inquiry, that's when you yourself are looking at your credit report through Credit Karma, through annualcreditreport.com, or maybe through your bank. You're reviewing it yourself just for purposes of what's on there. But when you go to a store, a lender, you're trying to open that credit card, that loan, that's going to be a hard inquiry because the intentions with that application is to open a brand new account. So again, that 10% doesn't sound like very much, but it can take a couple of months to recover those points, and it can make the difference between one type of loan if you're trying to purchase versus another. And again, just trying to avoid it as much as possible. There is one exception when you are shopping for either auto loans or mortgage loans. There is a 14-day shopping window where you can go and shop around and check out the different rates from different lenders, and it only counts as one inquiry at the end of the month. But again, that's the only exception is when you're shopping for a car or a mortgage, you have a 14-day shopping window. You want to avoid all those other applications for credit cards and personal loans. And the big section of that score itself is the payment history. So definitely stay on time with your bills, even the ones that are not on credit, like your utility bills and your rent, is very important. The first late payment that you have on your credit can drop your points anywhere from 60 to 110 points, just depending where your score is now. So someone that has had some stuff in the past, maybe negative, that their score might be around the 680 mark, it can drop it anywhere from 60 to 80 points. So on the higher side, 780, you're going to see an even higher reduction of 90 to 110 points. So again, avoiding that late payment by all means. And as Adelita mentioned, a late payment is over 30 days. So if you're late by a couple weeks, make sure you get that payment in. If you are planning on doubling up next month, you want to avoid that. Make sure you pay it before those 30 days. So how long will my possible credit mistakes follow me? So if you've had a positive account that has never had a late payment falling into collection, it's going to be indefinitely on your credit report. So it's not going to necessarily have a set timeline of by when does it disappear from my report. But that negative information, maybe a closed account from the past that did have a late payment or a collection from before that you did pay, or even an outstanding collection now, will be on there for 7 years from the last transaction date, so the original past due date. Bankruptcies, we definitely want to think before filing those. They do stay on the credit a little bit longer for 10 years for the Chapter 7 and 11. And those are the liquidations of debt. Or Chapter 13 stays on there for 7 years, which is a reorganization of the debt. Judgments on credit report, the only two that show up are technically bankruptcies show up in that segment, but tax liens. If you've had a tax bill before, you've never tried to make a payment, initiate any kind of payment plan, then it can be sent to collection, which will now ultimately show up on your credit report. Now, for that judgment from the taxes, whether it be federal or state, it's on there for 7 years from the date that it is paid. So let's say these were taxes I owed from 4 years ago, and I've never made a plan of any sort. It's on my credit now, and I decided to take care of it this year. It's 7 years from this year. Student loans, if they have had no late payments whatsoever, they fall under that positive accounts category. So they're indefinitely there. But if they have had some late payments in the past, they will be on there for 7.5 years. If you are past due on the balance on the student loan, that balance does not go away. That does stay on the credit report. And then the inquiry. So the times that you apply for credit. As I just mentioned, again, we want to avoid that by all means. There is a 2-year history that stays on your credit report. Now, let's look at if we don't have credit, if we haven't established it, or we need to reestablish it. So what can we do to get to the point of having good credit? So the very first thing is we want to make sure to pay our bills on time. And it's not necessarily credit items that we're paying for, but other bills that will help us to create that healthy habit. So paying our rent on time, paying our doctor's bills. Let's say we have a payment plan with our doctor, we want to pay them on time. Our utility bills, setting up things on auto pay so they are definitely getting paid on time. We want to create that healthy habit. If you don't already have a checking and a savings account, we definitely want to make sure to open one. Why? Because that would be the first place you would want to go and try to open credit from. You want to go back to your bank so they can assess if, based off how you've managed their accounts, they can extend credit to you. Now, not all banks, but some banks do offer secured credit. And so this can either be a secured credit card or a secured loan, and it's using your own money as a deposit. So if you give this bank $200, $300, they're going to hold that money in a separate account, extend you credit in that amount. And let's say it's a secured credit card for a limit of $300. You're going to want to make sure to use it, pay it, avoid hopefully paying interest on it. But as you continue to use it, we're establishing credit through that secured credit card that is being guaranteed by your own money. After about 6 to 12 months, they'll refund you back your deposit and continue with your credit card. Now, having to give a bank $200, $300, even $500 money that they're going to hold that you won't have access to in case of emergency is a little daunting. But in this case, there is an alternative, and that's to be an authorized user on someone else's credit card. Now, it's a temporary thing you want to do, and it's where a family member or a close friend adds you to their credit card that hopefully they use for a very small balance and they always stay on time. And that way we will have that account in particular popping up on our credit report. Nothing else, no other account that they may have, no other account that you might have. It's just that single account that you've been added to. And so how they use it, or maybe if you use a card that now is assigned to you, how it's being used will affect both credit reports. After being on there for about 3 months, you want to make sure to apply for your own credit and then get removed from it just in case something was to pop up in the future that could be negative, because again, that will be a negative item shared for both. Now, what about collection accounts? Very important. We do want to try and work through those accounts. And one big thing I always recommend is to negotiate. Try to negotiate for less. There is a negative impact on credit from the collection itself, and there is also an impact if you settle. But my view on this is the account has already hurt our credit. So why not keep a little bit of that money in our pocket and settle for less? So I always do recommend to negotiate. Ask the company if they're willing to delete the account as if it never happened. So even if you settle for less, there is no damage, extra damage, anything at all, because it's as if it never happened. Now you want to make sure to keep notes of that conversation, who you talked to, the dates, making sure if you make any kind of payment, you do it with a traceable form, a credit card, a debit card, some kind of personal check that we can go back and verify, yes, I did make that check payment. I have the proof should it not get cleared. After about 1 or 2 months of that having been cleared up, your credit's going to be breathing much easier and you're going to see a change in your score. So a really huge thing that recently happened with medical collections starting in July 2022 this year, any paid medical collection that's still on your credit report will no longer be there. They will be deleted. Starting January 2023, any medical collection with a balance less than 500 will also be deleted from the credit report. And moving forward, doctors are going to have a much longer period of time to wait before, or a clinic, before putting a patient into collection. So we definitely do anticipate some major changes happening to many people throughout the country on their credit reports, along with that medical collection cleanup. So what steps can you take today? So a really good thing we can do is actually access your free credit report. And the one site that you can do that is through annualcreditreport.com. There is no extras attached to it, no junk email, no mailers. It's just you going through that website to actually go through the credit bureau websites, for your free credit report that you're allowed to get once a year for free. Right now, for 2022 until the end of the year, you're able to access it for free on a weekly basis. And that's one of the COVID protections we have. So definitely you want to make sure to get a view into your accounts, how they're reporting. It will not share your score, but at least we can make sure that our accounts are all showing good. We want to make sure to dispute those inaccuracies. If we see that there's errors, our credit card is showing a late payment that we never had, have no idea who this collection is coming from, we want to go through those 3 credit bureaus that Alita mentioned, Experian, TransUnion, and Equifax, and file that dispute against that error. Get your monthly spending plan in place. Create a budget so that way you know exactly where does your money flow. Do we need to pay off more of our credit card debt to help our score go up? Let's look at the budget. Is there room to cut things out so we can start making those larger payments? Or maybe for the goal of purchasing, we have to pay off one of our debts. Let's go back to that budget and make some adjustments as much as we can. Figuring out how much you can afford is really key, especially when looking at that mortgage. Does it fit with everything else that we have? Our children's activities, with our utility expenses, our food expense, our other debts. We want to make sure to get that payment to fit well with everything else we have and our overall goals. Do we have financial goals? We want to take a vacation, being able to save for that emergency. We want to make sure to fit it all together. And again, staying motivated, even if homeownership seems to be a far distant dream, do not get discouraged. Create those vision boards. I know that's a huge deal. You put together those pictures of the homes you like, of the furniture you like, and share that goal with your family. Do whatever it takes to get to the end. And that's something that here at VCCDC we can actually help you with. As I mentioned, I meet on a daily basis with families to go through their financial goals, whether it be for trying to purchase or for as if you're a homeowner refinancing. We're here to help you in actually creating that spending plan, going over your credit report and figuring out what's on there, helping you dispute those errors. And again, thinking in mind of if goal of home purchasing, is it what is an affordable mortgage payment for you? So you can contact us. There's our contact details there on the screen. And we're going to move into our questions. So please make sure to enter your questions into the chat box. If we don't happen to get to your question, not to worry, we will send you direct messages. We're going to take some questions now. And don't forget to also visit the Comerica virtual booth. They have a lot of experts there with lending options, as well as here at VCCDC. We're here to help in any way that we can. So again, thank you for your sponsorship, Comerica Bank and Alita, for joining us. Let's get into these questions. So let me take a look through here, comb through them. All right, so we have one good one. And I'll ask you, Adelita, this one. Mm-hmm. Which credit score is the right one?
All 3 are important. There is no correct one. Depending on where you apply, the lender may pull from one or all 3. So it's important that we know our scores with all 3 companies. So again, none is correct. All of them are important.
Awesome. Absolutely. Now, this next one is also really good. How do I know if it was a soft or hard pull? Adelita, would you like to answer that one?
Oh, sure. This is great. Well, if you're pulling your own score to report or to review with a HUD approved to cancel, this would be considered a soft pull. And if you're opening a new account, it's normally considered a soft pull also. The bank you are with, as mentioned before, will offer free views. That's a soft pull. However, if you're opening a loan or a credit card, those would be considered hard pulls. So those ones are the ones that do impact your credit score.
So definitely knowing what the intentions are with what you're applying for makes a difference there. You guys have some really great questions coming in. What if I make a larger payment than minimum? Will this help increase my score more or faster?
Mhm.
So I'll take this one myself. I often get that question actually during our meetings that I have with families and individuals on improving credit. As long as you're making the minimum payment, that's what matters. We want to just make sure to stay on time with that minimum payment required. That's what gets reported to the credit bureaus. Did you make a payment? Yes or no? Now, making a larger payment is helpful to reduce the debt and hopefully in credit card sense, avoiding interest. But as long as you're making the minimum payment, that is what's most important. And then where can I get an accurate credit report? Alita, would you like to
Sure.
mention?
So if you're waiting or wanting to review your own account, you can get a free report without spam emails or calls attached through the www.annualcreditreport.com. So getting an accurate credit score will vary from FICO format, but you can pay to get your score you can also pay to get your actual score. So I always say, please monitor. My suggestion as a person who's been in the banking world very, very long, it is so important for all of us to know what our credit scores are. There are ways to get it for free, so you don't have to pay. And I as clients that I know that have come and said, you talked about secured credit cards, who can, hey, you know what, I can't get one. What can I do? The first thing I suggest is let's find out what your credit score is. Monitor your credit score because it actually gives you a goal to figure out how to improve that score. So again, that's the www.annualcreditreport.com.
Yes, it's a great website to keep in your toolbox for working with credit. And again, making sure to avoid those extras with applying for new accounts, charging your credit cards too high. So again, we're going to hold the questions for now, but we'll be answering them directly here on the chat. And again, I want to thank you, Adelita, for joining me in today's presentation and going through this.
I'm so happy to be here. Thank you.
And thank you again to our platinum sponsor, Comerica Bank, for sponsoring not only this workshop, but our conference as well. So hopefully you guys enjoyed today's little mini workshop. Hopefully you enjoy the rest of our conference. Please make sure to visit the virtual booth with Comerica Bank to get a little bit more information on their services, as well as here at VCCDC's Education and Counseling. So thank you guys again. Enjoy the rest of the conference.
Thank you. Have a great day.